This is Kathy. First, I'm going to do a sound check. Hold on. If you can see me, hear my voice, please say hello as well. Say yes, it works, or yes would be fantastic. Just give me 1 second to get everything organized on my end. And I'm going to be looking at your comments in just a second. Hello, JP, Tom, Zasuza, Tony, JR. Thank you so much. Sounds like everyone is seeing me. I'm going to get all organized. Okay. All right. We've got a really nice group to kick off our trading FOMC rate decision. And we don't have much time. We only have about 14 minutes until the rate decision. So I'm just going to get one more thing organized on my end. But yes, we don't have too much time until the rate decision. So, we'll go ahead and kick off right now. Okay. So most important thing that we need to think about going into the rate decision is what is expected. I said that if you joined me on our Monday market outlook webinar, and in general, it's really about expectations. It's not about, it's not about what the Fed actually does, but whether what they do is in sync with the markets, and also what they do plan to do going forward. So that is why you're looking with me at the CME Fed Funds tool. And this basically tells us what is priced into the markets. And it's been so volatile. Welcome, everyone, to our FOMC live trading session. And we're just kicking off. Hello. So back to expectations. These have been all over the place. Front and center, you see this here. It says right now, the market 59 plus 41. That's 100, right? The market is pricing in a 100% chance that rates will be at least, at most 5 to 5.25% by the end of today, which means that the market's pricing in a 100% chance of a 25 basis point, of at least a 25 basis point interest rate cut. But their market is actually pricing in a greater 59% chance of a half point cut. This has changed. This very early this morning when I was streaming to our BK members, we were at 65% chance of a half point cut. That has dropped from 65 to 59. A week ago, if you just take a look down here, I don't even know if you can see it, but I'm zooming in super, super big here. And I want you to look at this. 14% chance just a week ago. So the market has shifted its expectations significantly in favor of a bigger move by the Federal Reserve. Price action. Let's see if price action is consistent with that. Let me go to my daily charts. Okay, starting off with stocks. Dow futures are, hovering near record highs. This hovering near record highs is consistent with the idea that the market thinks a big move will happen, or a big move a smaller move plus signal to do more. But not much has changed since last 24 hours. We're just consolidating. Everything that's priced in seems to be priced in. U.S. Treasury yields are rebounding. So this is kind of interesting. U.S. Treasury yields are rebounding. And this rebound in Treasury yields tells us something different from stocks. What this is telling us is that bond traders are thinking maybe it may not be such a big move. Maybe they'll do 25 and then, maybe signal more later on. But regardless, bond traders are not necessarily, if you see the rebound that we had in the last 48 hours, they are not favoring they haven't increased their bets on a 50 basis point move. What about gold? Gold is flat today. Gold kind of looks like the stock chart, right? Gold hit new record highs on Monday and did not continue higher. So gold market is telling us that there's a little skepticism. Also, Treasury yields are telling us there's a little skepticism about whether or not we'll get that 50 basis point move. What about the dollar? Well, we always like to look at dollar yen when we kind of get a sense of what is expected from the central bank. And you can see, yes, the dollar fell to a new low on Monday, but kind of like gold, kind of like stocks, it's kind of rebounded a little bit. So there's definitely a little bit of hesitation and skepticism with forex traders about what they about whether or not 50 basis points is happening. And just for good measure, we'll look at euro. Euro also doing not much, after the dollar sold off on Thursday, Friday, and Monday. Euro dollar hasn't really pushed much higher beyond that. So let's take stock of all this, because before we talk about, how we could trade, how to trade, it's important to understand what is expected. So we know the market mostly expects and is prepared for a 50 basis point move, but they're kind of skeptical, and for good reason, because I openly pondered on Monday whether the economy really needs 50 basis points right now today. So traders are getting, as we get closer to the rate decision, traders are getting skeptical. They're thinking maybe it's not a done deal. So we have not been this close in terms of odds of this is pretty much 50-50. Odds of a 25 or 50 basis point move in I can't even remember, which means that someone is bound to be surprised. Many people are bound to be surprised with the rate decision. So, for all of these reasons, there's a very, very good chance that we're going to have very significant amount of volatility around the rate decision. And so I just want to show you, what we're expecting so we can be prepared. Just give me 1 second to pull up exactly what my little graphic that we created here. Okay, so the FOMC rate decision is twofold. All right, 2 p.m., right at 2 p.m. This time, if you were trading with us in the July meeting, you may remember that really the only thing that mattered was Powell's press conference, because it was really the guidance. But today, that's different. Today, pretty much everything, the most important things are going to happen in this first huge long column at 2 p.m. New York time. And so, what's going to happen is, number one, we're going to get the FOMC statement, which will tell us 25 versus 50 basis points. That is certainly going to be, very market moving, because the market is so divided on 25 or 50. The second thing is the economic projections. The last time we had economic projections was in June. And with the economic projections, the central bank basically is widely expected to cut their growth and inflation projection. So this part, I think, is not going to matter at all. So we're not going to really talk about that part. It's really the first one, the third one. The first one will instantly know 25 or 50. Then the third one is the dot plot. So this is what I think, if you watch my video this morning, this is what I think is the most important takeaway from one of the most important things from the rate decision. And the reason why I say this is so important is because the last time in June, the dot plot showed only 2 interest rate cuts from June to the end of the year, meaning that the majority of Federal Reserve presidents only expect 2 interest rate cuts from June to the end of the year. Now they expect 2 today. So if they expect 2 today, then that dot plot will almost surely change. We will either get a 25 basis point interest rate cut, followed by probably, I would say, 75 basis points of additional forecasted rate changes this year. So that would mean that we basically have a rate decision in November, December. So that would mean that, we would get a bigger move in one of those meetings and a smaller move in the other. So one of the meetings, maybe we'll get 25, the other one, maybe we'll get 50. Or we could get 50 basis points of rate cut. And then that's where it gets interesting. 50 basis points of rate cut. And then what else is priced for the end of the year? Will it be 25 for a total of 75 basis points? Will it be 50 for a total of 100 basis points? Will it be 75 for a total of 125 basis points? This is the dot plot. My finger should be pointing at the dot plot. The dot plot is really going to be key. And, just as Anshul rightly pointed out, to cut interest rates by 50 basis points today would send a very strong message to the market. It would send a message to the market that, first off, the economy is, doing significantly worse enough that recession or a hard landing is on the radar, and therefore 50 basis points is absolutely necessary right now. Or, that some will argue this is a political move by the Fed, which is not really supposed to happen. It's a political move by the Fed where, they are basically signaling the possibility of doing more to support the stock market in order to help the Democrats win the election. But I mean, come on. Do the stock markets really need to be supported when they are at record highs? Absolutely not. I'm obviously still guessing, but if I were the Fed, I would save my bigger move for when we have a more significant pullback in the stock market. Because me as the Fed, and I'm not the Fed, obviously, doesn't need to drive stocks to record highs at this point. The stock market has rallied a lot. Maybe it could use a little bit of pullback. Maybe I should do 25 today and then, let the market pull back a little bit and then, signal that I'm going to space out my rate cuts over the next 2 other meetings. I think the Fed has a lot more to lose by cutting interest rates 50 basis points today than they do 25. And we took a look at the beginning of the week at how the economy changed since the last meeting. And you will see here that, just quickly, there's as more greens as there are reds, which means that there's been improvements as well as deterioration in the U.S. economy since the July meeting. So it's not screaming either for a big, bold move. The stock market's not screaming for a big, bold move. The data is not screaming for a big, bold move. And if you look really down here, U.S. Treasury yields, this last line here, has already dropped 50 basis points since July. So in many ways, it has already done the work for the Fed. I don't think that they need to come in with this huge, bold move and do 50 basis points. But I could be wrong. And so that's why we always trade the FOMC rate decision reactively. So what's going to happen? So in 2 minutes, we're going to get the 25 or 50 basis point rate cut announcement, followed by the dot plot. There will be a big knee-jerk reaction. That knee-jerk reaction will likely last for 5 to 10 minutes. And I would say 10 minutes is probably likely because this is the big part of the decision that we're waiting for. So it's going to last for about 10 minutes, maybe 15. And then we're going to go into the mode of focusing on the press conference. So then you'll probably have a little bit of a retracement as we get into the last 5 to 10 minutes before Powell speaks. So whatever move happens initially will be aggressive, and there should be continuation. And I'm just going to put on my charts here. We're going to look at the euro dollar. This is dollar yen. We're going to look at the euro dollar. It will show up in the price action first. I think there'll be a knee-jerk reaction for anyone trading 20 pip stop, 20 pip target. If I hate trading it because ahead of FOMC or into FOMC because there's so many moving parts. But we'll see what kind of opportunity the market gives us. And let's see. I've got a bunch of my charts up here. Boris has joined us.
Hi guys. 15 seconds left. I'm going to call out the numbers, and then we'll let Kay see if anything is happening in the market, and then we'll take over. We'll see what the equities are going to do. Remember, this is about a half-hour break, so we got plenty of time to just chill out. But let's see what the Fed does first.
Okay, so yeah, sell-off. I'm assuming it's 25.
25.
What is it?
5. The decision actual is 5. Forecast was
50 basis points. So 50 basis points. Wow.
50 basis points, 5.
Wow. Why is the dollar selling off now? I guess we'll have to see. Two more rate cuts.
No, that makes sense. Dollar's selling off, right? Because they cut 50.
Yes. A bigger move. Okay, right here, 141. figure. Dollar yen, I think, was a good sell. I think this has continuation, even if you get it in the 80 handles, the 80, 90 handles here, 140, 85, I think you're going to head lower. So if you sold 141, as I said, you got 20 pips already. The markets are moving super fast. And I think that it's going to be a potential sell on rallies because we have 50 basis points. It says that they want 50 basis points more in 2024 for 100 basis points.
Right. It's quite a very aggressive median forecast. The current year was 4.625. It was 1.25 in June. A median forecast now for 2025 is 3.6, and it was 4.1 in June.
I like selling dollar yen. I was just putting to our members 141.12. I think that we could see a bit more of downside. This is dollar bearish. I mean, it's 50 basis points followed by a faster easing cycle. They must think.
Really unexpected, I think, in terms of how dovish they are. They're really not saving any ammunition for their holster.
Look, dollar yen is, it seems like things are rebounding a bit.
Risk asset
out on that.
It's very, very normal retrace action. In other words, you're going to get the impulse move, then a retrace action. Now the market is trying to figure out exactly just how dovish are they. Risk assets really, really popped hard here. But the big question now is, I think we have this impulse move reaction to the market. The big question now is they made a daily high, the 57.55 in the S&P. I don't know what the dollar yen low is. It's whether they're going to take out those lows or highs. That's really
I still think dollar yen's a sell. 141.34. I'm putting this in for our members right now for our swing trades. I think that you need wide stops, but I do believe that it's a sell here.
You know what else is diving, Kate? As I'm looking at your charts.
Go ahead and take the screen if you'd like. But yes, hold on.
Dollar CAD is diving too. If you're looking at that, that seems to be just no pause there. Dollar's really weak against the CAD too.
Well, with dollar CAD, it's really hard to say because the BOC was super dovish.
Yeah.
I think dollar yen is going to move lower. Let's look at slightly longer term charts here. We rebounded right against here to this zone, consolidation zone over here. And in the last 15 minutes, it bounced back up. I still think it's headed lower. But, my favorite, as I said on Monday, the best way to trade FOMC for me, because we still have Powell speaking at 2:30, is to wait for the Asia session, wait for the dust to settle. But we have, for our swing trades, put in a short at 141.34. That's also applicable for day trades. We caught a quick movement lower. I don't know what's going on with my charts, but we caught a quick movement lower earlier in the initial move. Then we got stopped out, so it's kind of a wash. So now it's now it's coming back 141.34. That's about almost 30 pips here. I would just close the other part of the trade right here. So I still think it's headed lower. 1 second. I want to show you. All right, BK traders, close your trade 141.01. I want to show you what we did at BK in 1 second, just because I'm multitasking right now. Right here. Do you see my screen, Boris?
I do. We see we see the Discord.
So, we did sell dollar yen at 141.34 for a swing trade. And, I did call out that we were getting out, let's see, at 141.94. Yeah, our target was hit 140.94. So it's somewhere between 141.04 and 94, depending upon whether our BK traders got out manually or on the profit target. That was the quick swing trade. I mean, sometimes with these FOMC rate decisions, you really, really need wide stops. And so that's why I waited a bit, came in the dollar yen, and apologize for my typo here. But it's we're trailing the stop on this one.
Yeah,
And
good for you. You really you held on to your conviction, and your conviction proved very true.
And I'm going to just talk about that in 1 second, but I just want to finish this up here. Hold on, my trading.
We're gonna let her do this.
First,
Remember, guys, we're letting her do the FX thing, and she's obviously making some really nice bits for you guys in the FX world, and letting her do a little bit.
All right. All right. So sorry
to talk about all the other stuff before the FOMC. So I'm going to let her.
Yeah. Let me just So I've managed. This is a real trade that we put in for BK traders. Yes, exactly what Boris said, which is that we sold it initially because I had a view that that the 50 basis points plus the additional 50 basis points was dovish, and that should lead to dollar weakness. It did sell off a little bit initially, and then it rebounded, and I got stopped out in the second trade. But I felt really strongly about it, and I just felt like we needed a wider stop. And that is when I decided for our BK traders that it was time to come in with our 40 pip stop on the first part of the position and 40 pip target on the first part of the position, and then trailing our stop with 30 pips. That this was significant enough to warrant a wider stop and a bigger trade. And I still think that this is significant. So let's kind of digest what happened. I'm going to pull in now my my tweet deck. So, okay. What we know here is that, first of all, we know 50 basis points was done. And there was only one dissent by Governor Bauman here, who preferred a 25 basis point move. The dot plot, this is the dot plot that we're looking for. Unfortunately, this only shows the most recent one. It doesn't show what happened, afterwards. But the dot plot, the majority of the dot plot is this huge. You see my arrow? My arrow, yeah, you do. Is right over here. So the majority of the dot plot has dropped and is now favoring another 50 basis points of easing before the end of the year. So probably 25 basis points in November, probably 25 basis points in December. Then we got something here, which is the prediction. So the Fed did not change its 2025 forecast for GDP at all. It sees the unemployment rate for 2025 up slightly, and then it sees core CPI dipping to 2.2% for 2.3%. So unemployment as well as the inflation forecast was revised lower. Now I'm going to go to my financial juice column here, and let's see what the verbal takeaways are, okay? So
we're only watching your Twitter, so you're still on Twitter.
That's what I'm looking at. Okay. So we're looking at the financial juice. I'm scrolling up and down. They're just going through. I don't even know how they're so fast, but this is very good to follow for those of you who want real-time news. It says, the Fed said they have gained greater confidence in inflation moving towards 2%. We will carefully assess incoming data, evolving situations. Let's see if they explain why they think they deserve such a big move. These are about, we will carefully assess incoming data. These are their forecasts. Fed sees economic activity expanding at a solid pace. Job gains have slowed. The unemployment rate has moved up, but remains low.
Like they see PCE at 2.3 versus 2.6. They really see a steep decline in inflation. That's what gives them. It sounds like that's what they were trading on, or basically they felt that inflation is starting to really decelerate quickly, so they have the chance to cut.
Boris is right. This is the only reason, because they said that you saw the labor market said that activity expanding at a solid pace, job gains have slowed, but the unemployment rate has moved up, but it remains low. So really all of this is not negative in my opinion. So the only thing that is potentially negative is the PCE deflator and nothing else, which, I still have to admit, I'm a bit surprised by in terms of their degree of dovishness. But this is where the trader in me comes in. I outlined all the reasons why I think they should do 25 and not 50. But, obviously, this is such a huge event risk, and I know I could be wrong. And if I'm wrong, the moves will be big. So that is always why we trade these big events like FOMC reactively. We wait for it to come out, then we jump in the trade. Because when it comes to trading, it's about minimizing your risk as much as possible.
Right.
And we minimize our risk by waiting to after the data. I say time and time again that knowing when to trade and when not to trade is absolutely crucial to being a successful trader. And that's what our webinar tonight is going to be about. Partially about mastering the clock and understanding when to trade and when not to trade. And Boris is going to put a link to our free day trading webinar tonight.
I put it in a couple of times, but I'm going to put it in right now so everybody can make sure. If you haven't registered yet, be sure to register. Even if you are not going to be able to make it because it's not convenient for you, if you register, you will then be able to get the on-demand video and watch it at your leisure. So, but it's very important to register. Otherwise, we can't give you the video. So please be sure to register, and then we'll be sure to give you the video, even if you can't come join us tonight.
Right. Absolutely. So, what was I just saying? So knowing when to trade and when not to trade is absolutely important. And that's why we timed this trade specifically. So now let's go back and look at the charts. Remember how I said, let's go back to look at just our regular chart, 5-minute chart of dollar yen. All right, what time are we at? 2:11 right now. So we have the big knee-jerk reaction followed by a little bit of continuation. We are probably about, I would say, in the sweet spot right now where we're probably going to get a reversal. And we're ready. See, we're getting the reversal, right? If you guys are little bottom pickers, you can pick, right when I said we were getting a reversal, we're getting a reversal because it's important to understand, why this happens. People are taking profits. And this reversal is not really one you should be trading, but if you really want to and you're tempted, you could. But we're probably going to get a little bit of a reversal into Powell's press conference. But right. I don't expect this reversal to be sharp. I'm still a seller of rallies because what is he going to say? With 50 basis points more priced in for the in the market, he's got to be reinforcing it.
I agree with Kathy that generally, the way it works, the dynamic in the Fed is they'll do an action and then he comes in and he like sort of a mildly dovish action, and then he'll come in and he'll say, no, we're really still hawkish. We're still data dependent. But given the fact of what they're just communicating, given the fact they dropped 50 and they're communicating more drops going forward, and they're saying that the PC is going to be much lower, it's going to be very difficult for him to just come out there and say, no, we're still hawks over here. We're still watching inflationary pressures. So no matter, he may pour a little bit of cold water on market expectations, and of course we never know. He could be really, really hawkish and surprise us. It just seems doubtful given the fact that it was almost universal vote by the Fed, and that it was a surprisingly dovish move, that he's going to come out there and say, no, we really didn't mean it, because he really needs, he needs to maintain his credibility. So I would imagine that it's going to be weak. One of the interesting things, just, while we're watching the price action, and then we'll probably let Kay go because she did such a great job trading here. Why does this stuff bounce, right? And you have to understand that, of course, it's bouncing because the people who were very correct on the trade are now short covering and locking in their profits. But it also bounces because you have to understand how dealers are trading. Dealers were on the opposite side of that massive red candle, right? Dealers have to make liquidity. Now, they may have dropped their bids, but I guarantee you they didn't drop their bids soon enough. The conventional wisdom was 25 base points. I don't think anybody expected 50. So a lot of the dealers are stuck with all this inventory at higher levels, and their whole job is to just get rid of the inventory. So they're going to try and ramp dollar yen for just a little bit to get rid of the inventory, and then they're going to settle in and maybe reposition themselves maybe to a lower move. So kind of understanding the market dynamics also kind of helpful in these post event trades.
Right, and once again, I want to say that it's really important to know how when we have big events all of the time. And I always talk, and we always oftentimes trade it with you. And I talk about how, we plan our trade and we execute on our trading plan. Now, I talked really fast in the first 15 minutes. So I'm not sure if you got the whole trading plan, but it was really, the whole gist of it was wait for the number to come out, jump in and get out quickly. Because with the FOMC rate decision having so many moving parts, this is what tends to happen, is that you have a knee-jerk reaction that will last, and I said it's about 10 minutes, and that's exactly how long it lasted. Then it rebounded, and then it probably consolidated, and but I told you just while it was bouncing that the rebound probably wasn't going to last. And a lot of this comes from experience. It comes from understanding the dynamics of how these things move around the central bank rate decisions. And so it is mastering the clock is absolutely essential. At the end of the day, I still think, as I said, that the dollar will end up lower. However, dollar yen is deeply oversold. And so, there's other pairs. And, these are also deeply overbought. But I think euro is definitely going to challenge this 112 level if we get a dovish, if Powell is dovish as well. A lot of these currencies could see, new movements, even though we've already seen, quite a bit of a drop in the dollar. So
there are a couple of questions here, Kay, for you. Minjuri wants to know longer term move in dollar yen. She thinks is it 138 in view? Do you think a 138 is in view for dollar yen?
Well, so now that we obviously still have Powell, and we've got to hear what he has to say. But the shift then focus turns to the Bank of Japan rate decision, right? So the Bank of Japan rate decision comes next, and with the Bank of Japan rate decision, they're either going to surprise with a rate hike right this week, which the market doesn't expect, or they're going to leave rates unchanged and then pave the way for a bigger rate for a rate hike at the following meeting. Regardless, the outcome should be yen positive, dollar negative, and so there's a very good chance that we're going to get down to 138, which is, if I delete this line here, because it's showing you that the reason why this line is important, it shows you that we're getting we're below this 23.6% fib. And the next stop below there after this low is indeed these highs here around 138.75, 139. So I do believe that we could see a move down to this level. I want you all to indulge me, and I'm talking a lot of Forex. Maybe you can indulge me. Let me know. Are you trading Forex, gold, or indices? And what you?
I'm gonna start a new poll. Let's see if you guys can answer that, please.
What all of you are trading right now?
What are you trading the most? We'll just do that.
Yeah, I like that. And as Forex does this, there's no trading opportunity from now until 2:30. You should be done. Yes, dollar yen can continue to fall, fine, but really you should be done from now until then. Wait till he speaks, and in the first 15 minutes after he speaks, everything that's important that will be said, that should be said, will be said at that time, and that's when that's when we get kind of the real move that happens. For the last.
And by the way, those of you listening to us on Twitter, come join us on Facebook. Come hang out with us.
YouTube, not Facebook.
I'm sorry, Facebook. Did I say Facebook? YouTube. Sorry, that was a senior moment. Come join us on YouTube. Come hang out with us. The session is just starting. We have a whole bunch of trading to do in reaction to what Powell's going to say. I redid my whole indicator, my whole strategy. We have a few minutes. I'm gonna talk about it once Kate kind of finishes up with everything. You're going to talk about how my new indicator works, how it's trading. I already clipped out a couple of trades while you guys were talking. It's really, really awesome. I think you guys are going to find it super, super useful. So we're going to put it to a test today as soon as Powell starts to begin talking. A couple more questions here. So what do we got here? Yeah, vote, guys. Thank you for posting in chat very much. But if you would vote, that would be really great, because then we can see exactly how distribution of instruments goes.
Yes, time for high fives if you traded. I don't give virtual high fives if you traded short dollars.
Yeah.
And yes, it's time to breathe easy and wait for Powell.
Right, exactly. Good job, guys. Good job trading. You see, that it's fast, it's exciting, but it's only successful if you're well prepared. And one of the things that I think you really appreciate is just how well prepared Kathy is, how she lays everything out logically. That really, really hopefully helps you out. And the power of fundamentals. One of the Kathy's great strengths is that she can marry the charts with the news story. And she talked about the idea. She had an opinion. We both had an opinion that it was going to be 25 basis points, right? Sort of a conventional view. You don't trade your opinion. You trade the news, right? That's the key to success. And that's what she did. The ability to be totally flexible, change your mind in a flash, and adjust to how the market is acting is the sign of a good trader, which is exactly what she did. Richard is following us all the way from Kenya. Very nice. Tell me the most exotic place that you are coming from to us today. I'm actually curious. Probably some of you are from the other end of the world, but some of you are probably here from the States. I'm actually curious to see where everybody's coming from. This is the first time it's happened in many years. Tushar is asking, are you saying, that's actually a good question. Do you think that this is the first time that in a long time that Fed has surprised the market on expectations? I don't know because a lot of people were thinking 50.
It depends which way you were, right? I mean, if you were 50 basis points, you weren't surprised. If you were going for 25 like me, you were surprised.
Right.
The one thing that I did want to say is when we trade, and it wasn't so much this week because we also had U.S. retail sales, but last week, for example, we had other pieces of data like just other pieces of data. But sometimes there's opportunity to trade the trade ahead of the report, but close the morning of, which we often do at BK. So even though I may have an opinion on FOMC, for example, or an opinion on U.S. retail sales, what I may do is I may trade the dollar in the day or two before, and then not trade the day of. So it's really about stepping aside on the actual event risk itself. And then that's because there's always, the expectations build up is an opportunity that you could leverage on. And we did trade U.S. retail sales with our members yesterday. But it is with big events like this, especially one that is so 50-50 where someone's bound to be surprised, the best move is to actually wait on this. But this is going to have continuation. I think dollar yen wants to get close to 140. And I think, as I said, euro dollar is probably gunning for 112 there as well.
All right, so Kay, we have a ton of people from Africa, Nigeria, Cote d'Ivoire, Rwanda, South Africa. Do you know what time it is in South Africa right now? If you were to guess, what time do you think it is right now?
In South Africa, I would think it's maybe 8 p.m.
It's 2:30 a.m.
Oh, I could not be more wrong.
And these are true degenerates, or these are my kind of people.
What time is it in Australia right now? I know Singapore. I mean, that's like 2 a.m. right now. You're hardcore, RB.
Australia is also
Bangkok. Yes,
it is amazing. I'm so glad you guys are all with it. Thank you guys for hanging out. Oh, am I wrong? Is it 2:23 South Africa?
Yeah, it's 10:30. I was much closer. I was 8 p.m.
So my Google is wrong. Sorry. Why is my?
Yes, Australia is 4 a.m. You guys, hopefully we made it worth your while and you caught part of that dollar yen trade because it was, let me know if it was worth your while because we really did have a big move on this. And we did have an opportunity.
So this is a much more civil time. Google got me wrong. I thought it was 2 o'clock in the morning. Anyways, for all of you guys who are up there in the middle of the night in Australia, props to you. Thank you for hanging out with us. Singapore also, it's kind of late. Singapore is also very late, right? It's
2 a.m. But we have a lot of Australians here, people from Bangkok. Thank you so much for joining us because I know that I would not be up this time trading if I was at 2 a.m. because my belief is that there's always another trade and there's always another trading opportunity. Well, for me, my trading times, if you joined me before, I always said is 8 p.m. New York time for my Asia trades and 6:30 a.m. for my New York trades. But even if I had something to do one day and I couldn't trade, there's always another trade. It's not about waiting for this big event because there's always going to be another big event, but this was obviously a very important one.
Right. Now, speaking of that, I just dropped the discount link to our service because if you're kind of interested, Kay is talking about, this is something that she does all the time. Post FOMC, the next day, tomorrow, is usually one of the better days to trade. There's like really some interesting opportunities. So she's going to be up tomorrow, 6 a.m. in the morning, New York time, looking for those opportunities, looking for those trade ideas. Maybe even Asia session tonight, she's going to do some ideas. So I just posted a link. If you guys are interested, just click that because that's a big discount. You can just come in, join us for a month and check out exactly what she does.
And join, I think most importantly, our free day trading webinar tonight, where I'm going to dive more into mastering the clock, understanding how important trading is. What time is it going to be at? It's going to be at 8 p.m.
8 p.m. New York.
You're going to have to kick off for us because I'm going to be in the morning and busy trading. So you can start it off and say hello to everyone tonight because I'm going to be laying on my Asia session trades tonight.
Right.
But we will be on with you talking about timing and talking about everything that we put into action today and every single day. About how timing matters and how, the day is broken up into 5 parts and each part has a different personality and a different behavior. So yes.
You want to know what everybody is trading most? This is interesting. So let me just tell you how the poll is shaping out. By the way, please keep voting in the poll. We'd love to really know. So Forex dominates the league tables. 45% of you trading Forex the most. So glad that you came here for the Forex part of it. 30% of you trading gold and 25% of you trading indices and futures. We're going to be trading indices and futures after Kay is done. So that's interesting. Very, very good to know. And, I think all those assets are going to be very tradable for the rest of the year. We have so many we have so much volatility coming to the year. Now that the Fed is moving, now, we have the election. We have lots and lots of stuff.
I'm going to drop in, Boris, can you put the webinar link? Oh, there it is.
Yeah, put it in.
Webinar link. This is Mastering the Clock. I'm just going to put it in free class tonight. Since we're waiting for Powell, this is what I want you to do. I want you to sign up for this free. I can't put it in for some reason. Can you put?
All right, I'll put it in
just
again.
The webinar.
There because you know why I can't put it in because it's a limited on character.
I have it on Bitly. Hold on, I'm just gonna put the Bitly link.
You want me to put it in?
No, I'll do it right now. Okay. Sign up for the free class. Also, the other thing is the election in the U.S. is coming up, right? Mm-hmm. So, you've got nothing to do right now because Powell's not speaking for another 3 minutes. We're participating in the Wealth 365 election, free conference. So make sure you sign up for that. There's going to be 60 speakers prepping you for election day or election week, election trading. So make sure you sign up. It's free. It's going to be a really great event.
Yeah. Oh, you know what else I'm going to drop in? I'm going to drop in the guide to prop trading, our free guide, 60-page guide. If you haven't downloaded it yet, please be sure to download it. It's completely free, beautiful PDF booklet that I wrote that talks all about prop trading. You can get subscription to Prop Trader Edge, which is free. You basically learn all about what we do here on a everyday live trading with me, where I trade my prop accounts, get funded, and then go get paid out.
What are you going to do, Boris? Are you going to put on Powell in the press background and let him
it's going to be I don't know how it's the problem is that I have to stream it through the screen. So it's going to be we'll see if it works in terms of putting it.
Well, it could be more distracting than anything else. I think I can put up.
So what we're going to have, let me just take my. You want to? Are you hanging out, or you want me to grab my screen?
I'll hang out for a little bit longer. Where's this financial juice? All of you should be following financial juice.
I have the actual membership to Financial Juice, so I have the headlines streaming off their website, so I have that on my screen.
Okay, why don't you take the screen and show the Financial Juice screen? We have no affiliation with them, and then read out whatever says is important.
Right. Let me see if this is, so we got a full screen here. So, here's all the stuff here. Here's the Powell presser. which I wonder, like, I wonder if it's if we could actually stream that through.
There's definitely going to be more opportunity for big moves
Yeah.
after Powell starts speaking. Remember, first prepared statements go out.
I'm going to just mute this and see if he is actually coming in. So it's nothing. So I'm just going to mute this right now for the time being. So
yeah,
when I have double, oh, there's Jerome. Jerome is coming.
Prepared statement comes out, and then we get the first couple questions from the press, which will be, why in the world did you make this move? Let's see if he says anything.
Right. I wonder if he can. I wonder if he can hear him. Can you hear him? No. So I'll translate. He's saying labor market is cool, but the economy stays strong. So interesting that he's basically saying that they expect inflation to go to 2.2% from 2.7. They are committed to keeping maximum employment. Very, very dovish statement. Sort of, a statement that we've already seen here, that they're obviously much more interested in cutting rates and keeping the economy afloat than they care about controlling inflation. It sounds like they feel the inflation battle has been finished. Now, it'll be interesting to see if he gets asked that and how he answers it.
So Dalian continues to move lower. I still think it's going to move lower. I still think it's, a good downside opportunity, but he hasn't answered questions yet.
What's the closed captions? Oh, here it is. Yeah, look at that. Oh, look how cool this is. You guys can actually see the closed captions, right? So we don't need him to talk. This is so cool. So I can actually, if you want me to, I can go full screen on the.
You have to, because it's very small.
Right.
Yeah, that's much better. It's so nice.
Right.
Yeah.
Oh, look at this. We're figuring out technology.
Our decision today reflects growing confidence in the strength of the labor market can be maintained.
Because of new headlines.
Yeah, that's what he's saying.
Great, and strength of it can be maintained, right? I mean, it's basically that's what he's saying. Oh, that's just a new headline. You know what? I'm going to see if I can put this on YouTube. Right? Let's see if we can do this on YouTube, and then we go to full screen, and you guys should be able to see much better. There we go. Yeah, this works, right? So eased and narrowed. Let's see if there's any people are commenting. Well, we have so many comments in the room here. Okay.
Yeah. I mean, Dalian just keeps on going lower. It's, working very nicely.
Yeah. In the meantime, risk assets are definitely going up. I'll talk to you a little bit about my indicator and how we're going to be trading this, or how we traded this already today, and how I'm going to be trading it tomorrow. And just to let you guys know, live trading tomorrow, 9:15, like all the way to 11. This is the new thing that I convinced Kathy to let me kind of trade for 2 hours. We're going to be trading Tuesday, Wednesday, Thursday every week. So come join me using all of the all of the techniques. I rewrote the whole indicator. I'm going to show it to you. I think you're going to love it. But let's wait a little bit. See what he's got to say. So see, everything remains well anchored. Surveys of household businesses, forecasters, blah blah blah. Measures of inflation are low. I mean, they just September economic projections, PC inflation. See, look at the drop in PC inflation. It's just such a sharp drop that basically this is really the whole story. And if they can get it themselves down, it sounds like they are pretty confident they're going to be at 2%. And if they're at 2%, that means they really don't have to keep rates at 5%.
He's also very confident that a soft landing appears to be the case.
Right.
And that wages is not really the source of inflationary pressures.
Well, in his...
of course not, right? Because I mean, if you think about it, firms are firing more than they're hiring, and anecdotally, they're not going to be upping their wages either.
Yeah, in his defense, there's absolutely right that basically, wages are really not been rising a lot. so forth.
All right. I am going to leave you all with Boris. I think we have a little bit more juice in the dollar, but I also have a feeling that it may push lower and then bounce and then consolidate. So either you took that additional, move lower when he first started to speak, or you've got to wait. I think you got to wait for a retrace to your technical resistance levels. Before getting back in. And so I suspect that may be the case for the rest of the move.
Do you know what I'm most excited about? I am most excited about the fact that I figured out closed captioning, so I never have to rebroadcast Jerome's voice again. So we can just
look. Just as I'm saying that we could get a retrace move, I suspect. Look, dollar yen's at 140.86, basically 40 pips from the.
Yeah, exactly. We're dropping lower in indices as well. Okay, so we're gonna let Kay go. Thank you so much. It was really, really great session. She's gone now, and now
I got kicked out. So anyway, what was I saying?
I was like, that was a very, very, very sudden exit. I was like, okay.
I don't know what happened. I think I just hit a button or something like that, or someone kicked me out. But what I meant to say was that just as I spoke, I said, I suspect we could have a rebound in the dollar. And that's exactly what's happening right now. And so, maybe I have a crystal ball, but I think this is truly just understanding price action. And he's not taken any questions yet. So the real questions are going to come, shortly from now. We're probably going to get a consolidation. And then when Asia wakes up, for those of them that are not degenerate traders like you guys up at 2 a.m., they're going to see this big move. And I think they're going to take the dollar lower again. So, I'm going to wait for the dust to settle and then get in and not be tempted by this move. And, use your indicators to help you get in on retraces. Like, for example, this is your short-term indicators. This is right here, 140, 170 is a short-term resistance. But I think the real resistance is, up at 141.10. So we'll see. I don't know if it's going to get all the way up there. That's pretty high up. For me, my moving average resistance at 141.10, which I think is pretty hefty.
Yeah, exactly.
All right. Now, formally, I'm officially going to say goodbye. And I hope you guys have some fun trading indices and maybe some gold with Boris. I'm sure he'll do a great job. And I will let him talk you through lots of questions about gold, Boris. Maybe talk about the price action.
Okay. Well,
and I'll see you all tonight for day trading tactics, including mastering the clock. See you all this evening. I'll put those links again after I say goodbye.
Okay, super. All right. I'm gonna reduce Jerome a little bit here. Let me go to escape. And we'll come off. We're going to come back to this screen in just 1 second. But really, Steve Leisman is saying, thank you. What Steve Leisman is saying here, you weren't necessarily thinking about 50. You wouldn't be specific. You said you weren't thinking about it. Let me see what he's saying. Last week, expected retail was what did he say? Oh, okay. So he's basically saying, hey, nobody expected you to do 50. Are we going to be looking at more 50s coming forward? How did you make your decision? So let me just see what he says back on that, and I'll tell you something. Okay. Well, this is really interesting. Okay. So, you remember how, like last month, they revised a huge amount of labor data, like down by 800,000, right? Do you guys remember that? So he's talking about this, and he's saying, hey, we had these two labor reports. The inflation data was muted, but we had this labor reports that were really, really kind of bad. And that, I think, is what freaked them out, That's what pushed them 50 basis points. That's really interesting. So the Fed got freaked out by the downward revision in labor and thinks that the labor market is weaker than all of us think at this point, and they are trying to be preemptive in many ways. That's very, very interesting as a takeaway right now. Whether how that affects trading, really have no idea. But as a longer term idea, that's super interesting for us to keep in mind. What that's basically telling me is the Fed now has gone full dove, and if they've gone full dove, there's a danger that if price levels come back up, right? Like let's say inflation stops going down. It's been going down, 11 straight months. A lot of price levels have definitely come down. But what if you get a spike? What if you get supply chain disruptions? What if we get some kind of risk in the Middle East? All that stuff could backfire on them. So they're taking a risk here on the idea that inflation has been beaten. They're starting to get worried about labor data. This is a really interesting takeaway from the story here. I think that's the big takeaway here on the trade. So you guys ready to start looking at charts and start trading? We'll come back. We'll come back if there's anything interesting to say there on the session. But I think we pretty much know exactly what's going on over here, right? So let me show you. I'm going to show you the Nasdaq chart first, and then we'll go through the S&P chart as well. I'm going to show you the new version of my indicator, and we'll talk about this tomorrow a lot more, if you want to. But I just want to make sure that you guys kind of get an idea of how cool this indicator is now. So if you remember, many of you who've been trading with me know that this indicator is basically based upon momentum and retrace dots, and they still are. They still exist. If you want me to show you the momentum dots and show you the retrace dots, they're over here, right? And every time we have 3 dots in a period SMA. This is an 8-period SMA moving average, 1-minute chart, NASDAQ futures trade. Anytime we have 3 consecutive dots, whether they be, this is a momentum dot, this is a retrace dot, that's a buy signal for us. Anytime we get 3 onto the downside, that's a sell signal for us. So what I've done actually is I've kind of cleaned up the chart so it's not so dotty, right? I just kept the buys and the sells signals ready. So how cool is that? Tony loves it. Oh, Tony, you love it, huh? Isn't that cool? Yeah. So it's really, really cool in terms of making it super simple. You can have the complexity, or you can, hide the complexity. It's all there. But here's what I really realized that's super cool. So let's talk about the general, broad, basic trade that we can do and what it means. Philosophically, I'm always trading continuation. I don't even want to use the word trend. There's really only 2 types of price properties. There is continuation. That means if price is going down, we think it's going to go down further. Or reversal, which means if price is going down, the next move is going to be up, right? It doesn't matter what strategy you use. ICT, IBS, UBS, ATS, MFS, whatever bullshit acronym you want to use. Citadel high frequency trading to the hedge funds that trade purely on a fundamental basis, they're all trading the same thing. They're either trading continuation or reversal. That's the only 2 properties of price that we're all moving on. And you can see Kathy also, of course, does continuation. She's looking for selling weakness or buying strength in the direction of the fundamental news. So on a purely philosophical level, what the sell or the buy button on this chart is showing you is that there's some intensity of movement in that direction, right? There is like 3 or 4 momentum sells, or 3 or 4, retrace sells, or 3 or 4 momentum buys. So there's some kind of intensity of movement, and of course, the longer this green segment lasts, the longer the uptrend lasts, the longer the red segment lasts, the longer the downtrend lasts. On a 1-minute chart, especially on a day like today, where opinion gets changed very quickly, you don't have too many longer term trends. Sometimes price will bounce back and forth in as little as 1 minute. You can see that that it gets very, very kind of chaotic here, at this point, right? So the standard kind of medium term protocol trade that we do, let's call that a a day trade is we have the sell signal. We take the sell signal, and this is Nasdaq. We trade Nasdaq with a 10-point target and a 30-point stop, a very, very negative risk-reward ratio, right? And the reason why we're trading with a very negative risk-reward ratio is because we're only going to take the first 2 sells in a segment, right? The critical thing here is, or the first 2 buys in a segment. Like, in other words, if I get 3rd sell in a row, I'm not going to sell. Even though this trade would have worked, I'm not selling it, because the whole idea is optimum potential for continuity. Optimum potential for continuity. We stay very disciplined. We take just the highest probability trades, and if we do that, we have a reasonable chance to be a 7-1, 8-1 in terms of our win ratios, and that really adds a lot of P&L on your books, right? So that's kind of an intermediate term segment trade. Very, very easy on this chart to do, and obviously we can do this on Nasdaq. We can do it on the S&P. Here's S&P. We can do it on the Dow, right? You get all of these segments going on here, right? However, this is my great insight that has just been banking me money. What I realized is that the trigger is the signal, right? So here's what I mean. If I have a sell trigger over here, that in and of itself tells me that there's more selling to be done. So the strategy that I came up with, that I absolutely love, that I'm doing, because I love to basically scalp, super short term trading, is I have a sell signal here. The next time price goes red, I'm going to short, but this time I'm going to do shorter target, shorter stuff. Same idea, 3-to-1 ratio, but 5 points on the Nasdaq, 15-point stop, or just 1 point on the S&P, 3-point stop on the S&P, 10 points on the Dow, 30 points this. I'm going to scalp on the continuity basis, and you can see how easy it is to P&L if you do this. Winner, because this is a winner, this is a winner. Then you don't, after 2, I do the same thing. I stop. I don't sit there and try to, bang the bottom. Flip this over, buy over here, winner. Flip this over. I wouldn't, this is Fed today, so this kind of died out on me. Actually, I think it actually would have P&L'd on me a little bit, but you don't trade the Fed day over here. But you can see that basically, as you switch around from sells to buys, and you take the first candle, you have very easy chance of making that 5 points as a P&L trade. So those are the 2 underlying conditions, right? And by the way, right now, let's have fun. So we have a sell signal. We have a sell condition. Oh shit! Hang on a second. I have to. Unfortunately, I'm late. I'm late to my. Let me see if I can get in there. I was late. Now I'm late. I'm late on this trade. Let's see if I can do this. Sell market. No. Nope. I'm getting didn't work because I was late. You see this move over here? I should have come in here. I dropped 5 points. I'm just late. So unfortunately, I just had bad execution on this part. I just forced a trade for you guys just to show you, but it's fine. There'll be many other trades that I want to show. Let me see if the S&P had a sell. Let me see this S&P. Okay, you know what we're gonna do? We're gonna wait. I'm gonna wait very, very patiently. If this turns red again on the S&P, which is my favorite instrument, I'm going to trade this on the S&P side and see if I can clip it. If it doesn't turn red, I have no trade, so it's no big deal. But if you see, if I come in over here on the open, 12, it dropped all the way to 8. It was such an easy sell. I just simply came in late, and I kind of forced a trade for you guys just to show you the principle of the trade. But since I'm trading small, I really don't care. Now I get market is popping back up. Especially, in a post-FOMC world, you're going to have very, very fast moves. So we're not going to get the full opportunities, to these trades. Tomorrow, we're going to have a ton of these trades when you trade live with me. The principal thing that I think is so interesting is the very fact that you can time this so well with this indicator. You know exactly what the plan is. You know exactly how to do the plan. You know how to execute the plan, and just trade it. however, now I have to watch the screen because I have to see if we start turning red here. Let me just do duplicate, and I'm going to put myself to. I just want to put the YM. The Dow is also a super good instrument for this kind of trading. So let's go to Dow. Oh, just got to make the chart a little bit wider so you guys can see it. Okay, I'm watching the Dow. So Dow is also in the green zone. So is the S&P. Nobody's coming down to the red zone to give me a trade, so I will have to let it go. If it does come down, we'll short it as a second come on. But the idea basically is kind of very, very timed, very specific, boom, 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 short and long trades that are coming off the momentum moves from these labels. These labels are signaling to you that there's more selling to be done. By the way, why is the market kind of selling off on all this shit? Because he's really kind of bearish the economy. Like, it's good to have lower rates, but the market kind of factors in lower rates. He's sort of saying, hey, we're a little bit more worried about the economy than you guys are. And the market is so priced in for such high earnings growth that, there's a lot of, there's now kind of like, I think, a lot of maybe second guessing as to what's going on. So, we'll see how it trades out. By the way, everything I say can be completely reversed if we start taking out the highs. If we start taking out the highs, the market is just going to be happy into the close, and then we'll be able to trade that to the upside. So we will wait patiently, look for the price action develop. I have it on my other screen here, so I'm watching all the screens. So far, nothing is setting up. But what I wanted to show you while we're kind of waiting this out is there's this other super interesting aspect to this indicator that many of you are going to find very, very valuable. Let me go back. Let me go into the settings. Oh, where's my settings? Oh, I can't get the settings wheel. Why can't I get the settings wheel? Just bear with me. I think my computer is just completely overtaxed right now. Here's the settings wheel. Okay, here's the settings wheel. And what I want to show you now is the turn signals. This indicator can also do turns, although now it's just, oh, wow, it's super, super slow. Okay, so here's what's so fascinating about how you could trade this indicator on a turn basis. So on a turn basis, the turn trade is the following. I'm going to see if I can mark it for you. We're going to have to just do it this way. I'm just going to have to mark it with arrows for you. Wow, my computer is really getting stressed out here, guys. I think I have too many streams open here. So let me show you what this does. Command this, no. Shift this. Oh yeah, here we go. This one, and I'm just going to show you again.
Hey guys, I think Boris is coming back on. I apologize for that. He's going to be coming back on. I think he just dropped out of the connection. You know, I'm just working on my main top 10 takeaways from the Fed meeting. And, for the most part, they cut 50 and they're trying to downplay this as a future new pace. They made a strong case for soft landing. They don't think they're behind the curve. I'm still bearish dollars, but, as I said, not a good time to be coming back into the markets.
Okay,
But, he's lost his connection. Hopefully he'll come back soon. I'm not sure where he is. Let me see. So did you guys make money trading indices? Did you trade indices at all? Let me know what's going on. I know I jumped back in. Hold on. Let's see. What are you guys telling me? Lost connection to Boris. All right. Here comes Boris back on. I think you have to add yourself. Here. Can you say hello, Boris?
Hi, guys. I'm coming back on.
Yep. You should hear him. Say hello again.
Yeah. Hi, guys. Can you hear me?
All right. You're good to go.
Okay. All right. Hang on. I got the connection back. Just 1 second. I got to go. Oh man. Hang on. Present. Just 1 second, guys. I'm trying to share my screen here. Entire screen. Share. Okay. All right. I think we're good. You guys should be able to see my screen, right? Oh, and we're starting to get red again. Now we're going to go to Trade Evade. We're going to sell. We're going to sell again. See if this time it works. I'm going to wait for 27 seconds. We're going to go and see if this is going to work here. Hang on a second. Let me see if I can go left. And I'm going to go this right. And we're going to go NASDAQ. So I'm watching NASDAQ. It's all really messy with me right now. But I'm selling the S&P here. Sell market. All right, let's see if we can make this move here. And boom. Okay, boom, boom, boom. Making it rain a little bit here. Hopefully you guys like that. Super fast. I mean, like as I was trying to explain to you, super fast. Let's see if I can make it rain. Does this work? There we go. Making it rain. Hope you guys like that. Anyways, as I explained to you, sell when you get into the red zone. Sell again. Right. This trade was like less than 1 second. We could have made a lot more money, and I could have done much larger size. I had very strong confidence that this was going to be a good trade. You could have done 10 contracts, $500 in less than 5 seconds on this trade, simply because it's set up so beautifully. I just wanted to make sure that I executed for you so you guys could actually see how the whole thing played out. Same setup was done on. Let me see if it was definitely. I'm pretty sure it was. Yeah, same setup on the Dow. Same setup on the Dow. You could have done the same thing on the Dow. Boom, boom, nice and short, right? Same idea. Now, a lot of you guys are talking to me about gold. I haven't looked at gold because I just try to focus on one thing at a time. But here, let's look at gold here as a signaler. Where's my? Sorry. I want to go to full screen on gold here. So here's gold as a full screener, full screen trade here. And same idea. You had a sell signal here. Gold actually was like a much better trade than almost anything else over here. Let me just go over here. Shift enter. Okay, look at gold. You had a sell signal here. Goes right over here. You can trade gold with $1, $3. So $1 target, $3 target, 2609. Boom, winner. Next sell over here, boom, winner. Right? Buy over here after the Fed makes the announcement. Buy over here, boom, winner. Buy over here, buy signal over here, buy over here, boom, winner. That's $4 of gold At one contract, it's $400. At 10 contracts, it's $4,000. You guys see how cool this is in terms of the ability to be able to just snatch it off the indicator. That's why I love this thing right now. It is so cool as far as trading goes. My biggest problem is actually having enough fingers to be able to execute multiple trades at the same time, right? That's really like my biggest issue right now. All right, let me see if you guys, first of all, give me some. Next time it rains gold bullions. Yeah, that was cool. Everybody liked it. So here's the thing though that's really important that I kind of wanted to share with you guys. What am I not doing, right? Even though it's tempting as hell right now to every trader who jones for price action. What am I not doing right now? I made my trade. I got nothing to do. The great thing about the way this indicator is working, that I absolutely love, is it forces you to stop until you get the next signal. My biggest problem, and I'm sure your biggest problem is the same thing, is I overtrade like a motherfucker, right? I overtrade completely all the time because I love the price action. And this forces you naturally to not do that. Okay, I'm just gonna, guys, just hang with me. I'm trying to pull you guys up in comments. So, okay, very cool, right? All right, guys, you seeing me now? Very cool. So now I can just relax until we get the next label signal, next price signal, and do it. There's probably about, between market open and market close, between 7 to 10 of these setups per instrument per day. So you got NASDAQ, you have Dow, you have S&P, and you definitely have gold. The reason I don't trade gold is not because it doesn't work. It's because I just don't have enough eyeballs. My biggest problem, as I said to you, is very often you get 2 or 3 of these instruments setting up at the same time, and you have to be super quick in trying to manage all these trades. So I just don't get greedy. But the opportunities are endless as far as the ability to be able to trade this, one way or the other. Did you guys lose me on the turn trade, or did you guys understand what I was talking about on the turn trade? Because the turn trade is a really good trade for people who want to do more of a swing trade, kind of a one trade per day thing. Do you guys want me to go show you the turn trade again, or you good? You're good as far as seeing that. I'm happy to show this to you. By the way, come join me tomorrow. Make sure that you subscribe to the channel. If you subscribe to the channel, you'll get notification, and I'll be doing it tomorrow. We're going to be doing a trading tomorrow, 9:15 to 11 o'clock. I'll go through all of this in much more detail. It'll be really super cool, and everything's going to be working really fine. I think I realized, by the way, what's going on. I'm stressing the hell out of my computer, and so like tomorrow, I'm actually going to set up I'm going to set up my PC over here as my other computer to offload all the charts, and then I think we're gonna have no problems streaming all this stuff because I think having 8. Let me just explain to you what the setup is. This is a tiny little Mac, poor little Mac, 8 megabytes of RAM. I have not one but 2 double monitor computers. Double monitor computers is 1440 by 3200 twice. So these screens are massive, right? So I have 2 of those, and I have a middle screen. So I'm running 3 computers with an accelerator on this thing. It's and I had all the screens working. It's no wonder that this thing gave out. Poor little baby. I'm gonna upgrade to Mac 4. Who's by the way? I'm actually curious. Who is? Let's do a non-trading poll. Okay, because we got no setups to go, so might as well have fun. Let's do a non-trading poll. Let's see how many of you are Apple junkies. Let's see who's going to buy. I'm going to do a poll. Oh, I have to kill the other poll. Okay, so let's end this other poll. Let's do a new poll. New poll. Who will you upgrade to iPhone 16? I'm actually curious. Let's see. The market says no, but I'm actually curious what you guys will do. And the M4 chip. Yeah, I'm definitely getting the M4 chip. I am so on that. So on the M4 chip. Okay, getting another sell. See another sell label. This is a third sell label. Oh, this is gold. I'm looking at gold here. So let's look at all the other instruments. Hang on a second. Sorry. Let's do it this way. Where's the S&P? S&P, another sell signal here. So now if we go red, green, in other words, go up above the moving average, drop below, I'm going to short this thing. And as you guys get comfortable, with the setup, I'm going to start doing nice size. Like this is, I'm doing pussy trades here with one contract. This can be easily a 5 contract trade, meaning 250 per trade, every trade on the trade. So let me just do one other thing here, guys. Let me see if I can do duplicate. Again, I don't want to stress my computer, but I want to go to the. Oh no, I don't want to do the. Do I want to do yes? No, I want to do Nasdaq. Okay, so I'm going to Nasdaq. So I'm just, unfortunately, I have like managing the main screen. So Nasdaq doesn't have a sell signal. S&P does, and everything's kind of dropping, right? So why is the market dropping? First of all, market is dropping because the knee-jerk reaction always gets unwound, right? The whole point is you have this knee-jerk reaction, and then everybody kind of decides, oh, it's all overcrowded. We were all bullish anyways. The market has been rising for the last, 2 weeks anyways. It's due for a correction. But now, and this is the thing that I think is going to take everybody by surprise. Now, I could be completely wrong. And I don't, I love to pontificate. I don't trade my pontifications, but I love to pontificate. So many of you may have heard that when the Fed starts cutting rates, that's actually when the markets go down, right? Because what is the Fed doing? It's basically admitting that the economy is getting weaker, right? Today, in my opinion, the single biggest takeaway from what's going on over here is just cut the bullshit, is the Fed is actually freaking the F out, that jobs are starting to evaporate and that demand is starting to collapse. And that while everything is hunky-dory and everybody's, burning money like there's no tomorrow at restaurants, bars, hotels, and airplanes, the party is definitely coming to an end. And that I think is super interesting as a story, as a takeaway. So keep that in mind. Think about that. Let me give you, while I have you guys, let's make sure everybody who wants to prop trade, let's make sure you guys lock in the biggest discount with my friends at Apex. That link will get you 80% off. You can trade the $250,000 account like I am for $50. It's a ridiculous deal. Like literally, there's no better deal in the business than this deal. I'm trading a couple of them. Go buy 10 of them. You'll thank me later because you'll be able to, if you get one of them funded, you'll have so much nice capital to be able to trade with. It'll be awesome. I'm running 2 of them right now to try to get funded. We already have 5 funded. Once I get these 2 funded, then we're going to trade them, do nothing but trade them live with you guys in YouTube and show you live trading. I mean, not live, but trading funded accounts. We're always trading live, but now we're trading evaluation accounts. And we're going to be trading funded accounts with you. So that's sort of the next game plan as far as it goes. So I'm still looking for the price action. We actually dropped. Look at this. That's a big drop. 55 points, 60 points in the S&P. That's 1%. We dropped 1% off the top. That is a market not happy, starting to realize, oh shit, we're going into a recession. I don't care what Jerome says. That's what's going on, and it's kind of interesting. Now tomorrow it may change its mind, but to me this is a really interesting reaction, and it's actually much more intelligent and much more understandable as to what's going on. A big rate cut, is a bearish event. Questions? How often do I trade live? Actually, to be honest, I was going to say Tuesday, Wednesday, Thursday, but it's actually not true. I trade Monday too, because here's what we do. Monday, Kathy does her week preview. It's all live on YouTube. Join our channel, hit subscribe. You get notifications all the time. What we're doing Monday now is I'm just basically hopping on board, and then once she's done, we're just keeping the stream live, and I'm just trading live out of the stream. So I'll be trading live with you guys on Monday, from now on. Then Tuesday, Wednesday, Thursday, every day, except for Fed Day, we obviously trade in the afternoon. We're trading 9:15 to 11 o'clock, right? 9:15 to 11 o'clock after the news flow comes out, and just clipping, $100 trades all day long, for the scalp side. And then obviously we're also going to do the turn trades and everything else that we can once they set up, and I'll show you how those set up as well. If you guys want to look, I'm just curious to see what's going on here. Okay, gold. If gold turns red, that's a sell for us. It's interesting that gold, what I find fascinating is gold. I mean, this is bullish gold in a sense that rates are going down, right? And yet, big profit taking in gold because it kind of peaked out. Really peaked out. You know what's interesting to look at gold? Let's look at gold on a turn basis. Oh, shit. I got to master my hotkeys. Let's look at the turn side, turn trade in gold. See if we're getting a turn signal here. Wow. Oh, ooh. So here's the, sometimes you get it, sometimes you don't. This is really a little bit frustrating. For us to have traded this properly, we needed this turn, and another shoulder. We just didn't get a turn signal. It just didn't come up as a trade. If we did, then we would have used the high as our stop, and then you could do 1 to 1, 1 to 2, or 1 to 1.5, or 1 to a half, depending on how you want to trade something. But this would have been a beautiful turn signal. It just, the indicator just did not show up on this particular structure. But you get the idea of how the indicator works. It basically, here's a good idea of where you get the V-shaped recovery. High, lowest low, lower low over here. I guess it's a little bit low. And then a higher low over here. You could go, and you would get long over here. So if I get long over here, this is like a quasi kosher trade, not quite perfect turn, but just having this, this threefold kind of a V-shaped formation puts you at 25.98. Stop would be right over here at 95. Let's say 95. So that means I got 3 points of risk. I can go 1 to 1, 98 to 601, which is right over here. I can go 1 to a half, 98 to like 600, basically. Or I can go 1 to 2, and I would have gotten, probably would have got stopped out or put the stop to break in, because this didn't quite turn as much as we wanted it to be. But what you're looking for is that kind of a V-shaped on the bottom. Here's an example where you actually the turn trade did not work, because if it works all the time, it wouldn't be a strategy. It'd be a magic pill. 1, 2, 3, right? You get short over here. This is a sell turn trade at 96. The stop would have been 600. You would have just been stopped out. It just did not drop. It did not drop. High enough. And obviously, to be honest with you, today is FOMC day. You really shouldn't have traded this in front of FOMC anyways. But it's interesting to show you, because I think it offers at least once or twice a day some really, really cool opportunities for trading. Now we're sort of a little bit quiet, right? And now I haven't even looked at the presser. What's the best platform for Apex? Trade-of-8 by far. Why is Trade-of-8 the best platform? Super fast, right? And I know there are people who are going to tell me NinjaTrader, and if you want to write scripts, and NinjaTrader is pretty good. Yeah, NinjaTrader is definitely great. But here's my problem with NinjaTrader. NinjaTrader is not web-based. NinjaTrader is Windows only. NinjaTrader has all these windows that if you lose one window, it just literally goes off screen and you have to go find it. It's a very complicated system, and it's completely non-intuitive. It's like written by Soviet nuclear engineers. It has all the charm of Stalinist architecture, in my opinion. So something simple, elegant, easy to do. All I want out of my trading platform is when I click the button, I want it to execute. I want an automatic stop. I want an automatic target. And that's all I want. And I want nothing else out of it. So Trade-of-8 does more than enough for that. As far as trades go. Oh, look at this. Let's see if we're going to get red. I'm watching the S&P. Let's see if we're going to go red again. Let's see if we go right again. I'm watching this. Let's see. Maybe we get one more trade here before the end of the day on the red side. So what's the setup here? The setup here is I got a sell label, negative momentum. I'm waiting for price to go red again. If I go red again, I'm going to take a scalp trade to the downside, right? That's the idea that I'm trying to trade here with you guys. I know, Andy. I understand this. It's frustrating that Apex doesn't do Africa, but they're moving slowly. They're moving slowly beyond the shores of the U.S. So maybe they will do it soon. I'll try to speak to them again about it. I kind of feel you're right, Andy. We have so many traders from Africa who are really interested. Kenya, South Africa, Nigeria, tons of people who love to trade it. Yeah, maybe I can convince the bigwigs over there. They're on a trip tour now, but maybe I can convince them. Okay, so I'm just being patient. Nothing going on. You see this again. What's so good about this is that there is no trade. You don't do a trade. You're not forcing. I'm not forcing a sell here because I'm jonesing. I'm jonesing for a short. I want the market to actually show me that selling continues, right? And you can see, by the way, from price structure, all the sequence of lower lows, right? Market kind of selling off. We came up 1% off the highs. All of that kind of telling you that maybe there's a little bit more selling to go on. But at the same time, and this is the key thing, you have to look at everything from two perspectives, right? Is yes, lower lows, everything else, but we stopped going down. And if you stop going down and you kind of come back down and back up, that's actually a bullish signal, and it means the market maybe they maybe want to take the buyers into the close. So we'll see how it goes. The price will tell us the story. We can watch it in the meantime as it develops. Let's see if Nasdaq is doing this, and I want to go to sorry. Oh no, sorry guys, I actually missed gold. Well, as I said to you, I don't trade gold because I can't keep track of so many instruments. I'm just only trading the futures. But if you look at gold, by the way, let's look at gold. I wanted to show you here. Show me buy, sell signals. Let's look at this because we're looking at the turn gold. Remember I said to you, sell, I'm looking for red and gold. So this would have been the signal. 87, I'm in. I'm looking for $1. I'm looking for $1. It drops like $3 my way, right? It drops $3 my way. This would have been super easy. It's $100 in less than 1 minute trade right over here. Okay, let's go see what's going on over here. Nasdaq. Okay, let's sell. Sell market. Oh wow! Look how fast that is. Do you see that? Did you see the speed of this thing? Boom, boom. Isn't it fun to make money that fast? Come on, that is kind of fun, right? That is somebody said to me they wanted raining gold. Let's see if I want to do raining coins. There we go. Now look, that doesn't happen all the time. This is FOMC day, and I'm only taking tiny little profits. That's why it's going so fast. But it is fun, and it's what I love doing. I love the ability to take quick profits because a lot more fun than taking quick losses, right? Just another example of just boom, 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 take a quick shot, boom, make it go. And go away. Gold was definitely the better trade. And maybe, so many of you guys, I'm looking, the fact that you guys in the poll, like honestly, a third of you are trading gold. I think, I don't have a choice. I think, this indicator is so good and it's so simple for me to use that I think I could actually probably keep an eye on gold and keep an eye on indices. And maybe we'll trade both. Maybe next week, tomorrow, we still have one more day to trade tomorrow. Maybe we'll just bring the gold back in if you guys want it. Let's see. Let's do a poll. Let's do a poll, and this will decide if I'm going to trade gold. So we'll stop this one. Oh, look at you guys. Yeah, you guys are totally validating the idea that Apple is just not selling shit. Nobody's going to buy the 16. Okay, so let's do one final poll here. Let's do our final poll. Should I trade gold again? And if it's like significantly, now everybody's got to vote. If there's less than 50 votes, I'm not doing it. But here we go. Do me 100 votes, and I'll play the game with you guys. Look at us dropping like a stone. Look at that. So yeah, you could take small scalps, you can take larger trades. It all becomes really, really cool. Let's actually see. Was there a turn trade in? This is kind of interesting. I'm kind of curious here. Let's look at the turn signal here. What the SM show turns? Wait, hold on. Both labels. Okay. Yeah. Oh my God. Holy shit. Wow. Look at this, guys. Look at this. Look at this. Look at this. Let me clean it up for you to see. Look at it. Look at the turn chart. I'm actually going to clean it up to you so you totally see it. So I'm going to get rid of everything that's noise over here. Look at this. Oh my God. What a beauty this would have been. This is 1. This is 2, right? Peak. And actually, I should have been thinking about this, but there's so many stuff I want to talk to you about. I just couldn't quite get this. So this is 1. This is peak. This is the third signal. Short over here. So if I'm short over here, that's 714. This is a massive. It would have been a massive stop. It's a 40-point stop. Maybe you would have done a 20-point stop, 10-point target, but 10-point target, boom. 20 minutes, you're done. You're done. Kind of cool, right? Really, really cool, right? All right, I only got 26 votes in gold. I want everybody voting, but it's pretty overweight. 85% of you want me to trade gold. So, yeah, I mean, I think that's really, really awesome as a turn trade. So, what do you get the turn indicator? So all of this is totally free to anybody who's a member. Let me give you a discount link here. This is a discount link to my membership. I'll tell you a little secret, by the way. If you come join us for the webinar tonight, there's even going to be a bigger discount, and you're going to get Kathy and me, all at once. So I'm not going to post a link. The link is up in the thread. Go look up in the chat if you want to join us in the webinar. But we're going to be offering a really, really good deal for you guys to get everything, coaching and all of the indicators and all of our signals for one low price. So come around for that. But if you want to join us for a month, get the turn indicator, get everything like that. That's all available for you. I'd love to see you in my room. Okay, I think we did a good job here. We ran with you guys for 2.5 hours, hour and a half. I got to get ready for the. You already registered. Good job. I got to get ready for the webinar tonight. We banked all our trades, right? I banked my trades. Kathy banked her trades. There's more to come. Every day, money, money, money. Every day, I'm gonna rain. That's my intention here. Every day, we're gonna do this. I'm gonna do this. This is what I want. So tell your friends, come hang out with me. The setups are awesome. They're really, 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 really accurate, as you can see. I'm going to try and do 7-1, 8-1 trades with you guys. Tomorrow, brand new day, brand new scalping. The indicator is now super easy to use. Even somebody as dumb as me can use it. And I wrote it. So you guys can use it for value. All right, enough of this rating money. It gets kind of annoying after about 2 minutes. Otherwise, everybody enjoy. Hopefully, I'll see you tonight. If you want to. If I don't see you tonight, just be sure to register and I'll send you the video. And otherwise, everybody have a wonderful day. Thank you for handling all the technical issues that we had here. But I think I'm going to stop stressing my poor little Mac, and I'll add my PC to help us keep track of all the charts here. Otherwise, everybody have a wonderful night. There's going to be a lot of price action tonight, guys. Guarantee you that the futures are not going to be quiet tonight. It's going to be a lot of interesting trades if you want to do it. I'm probably going to while Kay is yapping away in the webinar, I'm going to trade on the side because I'm a degenerate. Thank you, guys. Everybody have a wonderful night. I'll see you soon. Take care.